What's the difference between a tax projection and tax planning? Let's talk about that next. Hey guys, I'm Alison Eddings. I am a CPA in private tax practice. Welcome to my channel. I'm shooting outside this month because it's gorgeous. It's autumn, and where I live, autumn is very short-lived, so I try and make the most of it. We are talking about tax planning and tax projections, the difference between the two. And the reason why this comes up this time of year, honestly, is because you might not realize that tax preparers have deadlines all year long. There's some individuals in practice who only work up till April 15th, but corporations and partnerships and individuals, they have different extension deadlines. They have till September or October, but really October is the drop dead kind of date. Things really get much better after that. Plus, by that time, those of us that are licensed like me, we get to do our continuing professional education. Oh my goodness, I hope my microphone is good enough not to pick up that leaf blower? I don't know, whatever. It creates atmosphere, right? So by this time of year, we've done some continuing education on what's new in the tax code so that we can figure out ways to minimize your tax burden. So, but there's a difference between tax planning and tax, or what is the term I'm using for it? Tax minimization and tax. I did have it like it was an alliteration, but one is calculating what forecast for your tax balance would be, which is really super easy for some people. For others, not so much. And I'm going to do another video this month, and I'll link it to the end of this one, hopefully. Or I guess I'll link this one to I don't know how I'll do that. I should do it maybe first. But I'll do a video this month, and if you subscribe, you'll get notified as soon as it drops, on how to, especially if you're just a W-2 employee, how to calculate your projected tax liability, and also to look at how much you've had on deposit already to see if you're close to your target. That is a totally different beast from tax planning. Tax planning looks, and it has to happen before the end of the year. Like there's one little thing that we can do after the end of the year, but we still have to have certain supports in place. But other than that little thing, for the most part, you have to do all these tax planning before the end of the tax year, which is of course December 31st for most people. And there's different organizations that can opt for a different tax year, and not going to get into that. Not going to be super helpful for you at all, probably. So we won't even go there. See, this is why tax stuff is just such a challenge, because there could be this or there could be that. If you ever email me, you're my client, you email me and you want a direct answer, I wish I could give it to you. Sometimes I can give it to you because the answer is no. But for the most part, the answer is maybe, sometimes kind of, depending. And that's just the way the tax code works. But tax minimization is when I look at your situation and say, oh, if we made this approach, we could minimize your tax burden. Now, for W-2 employees, I'll be honest with you, what happens during open enrollment is the most exciting time for you to minimize your tax burden. If you have an employer and you make money exclusively from that job, that's really it. It's your decisions to make a Roth versus a traditional 401k contribution, how much you put in your HSA, if you use your dependent care benefit through your employer or after tax, like on your reconciling on your tax return. If you, what health care plan you choose, those are the things that are really going to have a huge impact on your tax minimization for the year. And that's stuff that we can't do, you and I. That's between you and your HR rep. And if you're my client, I usually tell my W-2 clients, reach out to me during open enrollment, because sometimes your HR rep doesn't really understand, or they've been thrown into this thing and they don't, they read the script and either they understand it or they don't. And you might ask them questions like, what's better, a Roth 401k or a traditional? I don't know. If I were an HR rep, I would know how to answer that. So feel free, when you're my client, you just call me, email me. I will walk you through that. I'm delighted to. But planning for people who have investments, people who have rental properties, people who have small businesses, that's when and one of the obvious ones I'll say for people who have investments, and you've probably heard of this one, if you have gains and you don't want to be paying capital gains, before the end of the year, you sell off your losers. I mean, that's a real basic, obvious tax planning strategy that I'm giving away for free. If you know that you've got an investment that's just not going to come back and that it's worth less now than you bought it for, that means you're going to have a capital loss on that. And you know it's not ever going to go back up to what you paid for, then sell it off before the end of the year, and those losses will offset some of your gains. Simple tax minimization strategy. There's another one that I've really enjoyed implementing this last 18 months. Section 139, which allows any, I want to say it properly because if I'm saying it on YouTube, I got to make sure it's absolutely perfectly positively right. Any company can pay any individual any amount inside a federally declared disaster area to support them during that federally declared disaster area, and that's really broad. So we've used that one a lot. We've used that one for small business owners who, I don't know, a lot of kids had to get more COVID tests, and while your medical is deductible to a certain extent, it's a much better deduction on the business side, so we move things over there. Or people that had, they couldn't go to the gym anymore, so they got exercise equipment, things like that for their mental health for during the pandemic, or counseling, particularly during the pandemic. We've seen a lot of kids need lots of help during the pandemic. So things like that. That's what tax minimization is, and that's totally different from just projecting out. Well, I saw my straw on my drink. I thought there was a big bug there because it is autumn. The bugs get big around here, at least. So that's the difference between planning out what your tax liability is going to be at the end of the year and minimizing what your tax liability is going to be at the end of the year. They're two completely different services. So if you do want to reach out to me about tax minimization, this is the time to do it. We need to do it before the end of the year. If you're not currently my client, just reach out to Chris and we can work on that. Those of you who are my clients, I go from top down with those with the biggest tax liability down, and work that way so that we can make the biggest hit. And I am only one person, so I don't reach out to everybody all on one day, because it does require a certain amount of thinking and deliberating, and then tossing it back to you guys to see what you think you could make happen, like IRA contributions. So, okay, this is, if you made this much of an IRA contribution, it saves you this much tax, but yes, you still are going to come out of pocket more than if you had not made the contribution at all. So anyway, hopefully this was helpful for you. If it was, I would appreciate it if you would subscribe. Sharing would be just delightful. Thank you so much. And I look forward to seeing you again soon. Take care and have a wonderful autumn.